Hello and welcome to In Our Tax Time, a series of conversations with senior and influential figures in the tax profession. I'm John Whiting, and the aim of these sessions is to look back at things that have really helped shape and, give us the tax system we have today to a certain extent. And today I'm talking to somebody who, in many ways is Mr. Tax, somebody who's been in tax for a long time, Nigel Eastaway. We could do, Nigel, a whole series on your career, but you've been in tax since, 1960, I think, is it?
That's right.
And still going today as a partner with MacIntyre Hudson, so still very active.
Absolutely, yes.
And what got you into tax in the first place then?
Well, I became articled to a firm of chartered accountants, and the principle that I was actually articled to, when in those days you were articled to a particular person, and it was the tax partner that I was articled to, a chap called John Greenacre, and so that got me into tax more or less from the start.
And what was tax life like then?
Well, it was relatively simple in comparison with what it is today, but the thing looking back that really strikes me is the level of taxation that we were dealing with, where you had income tax was around about the 40% mark. But then you had surtax on the top, which went up to 50%. So at an income then of 15,000, you could be paying tax at 90-something percent.
They had it tough then, as some of us remember.
And of course the other thing that really strikes me looking back is the extent to which inflation has taken hold. Your personal allowance when I started, I think, was £360 per annum. And, of course, as an article clerk, I wasn't exactly overpaid at £4.50 a week, plus luncheon vouchers. And in those days, of course, a 3-shilling luncheon voucher, or 15 pence, would actually buy you a 2-course lunch. And I don't think you get very far these days trying to get a lunch for 15 pence.
I think not, and I'll put my hands up. It was my OTS team that suggested it was time to abolish them, so sorry about that, Nigel. But one of the things that didn't feature in the fiscal landscape when you started is really one of the things I really want to talk to you about today, and that's capital gains tax. Because, of course, in 1960, the very early 60s, there was no capital gains tax, no tax on capital gains. So how did that influence things? How do you remember it shaping things?
Well, you won't be surprised, of course, to understand that the name of the game in those days was to try and make a capital profit, which was tax-free, compared with an income profit, which was taxable at 90-something percent. And so there was quite a bit of planning based on trying to realise capital profits rather than income profits. And that, of course, led to the introduction, first of all, of the short-term capital gains tax in the 1962 Finance Act.
Yes, now that's an interesting one, wasn't it? That short-term capital gains, that was 3 years, and so what was the reaction? Accountants jumping off high buildings?
Not really. Because it was a short-term gains tax, and the 3 years only applied to land, I think it was 6 months when it first came in for other assets, and people just sat on them until they were outside the time period, by and large.
So this was fairly easy planning.
Well, yes, it wasn't exactly sophisticated planning. It was just wait until you're outside the time limit.
And even that couldn't be caught by the GAR if the GAR had then existed.
Absolutely not. Yes, you were following the letter of the law.
So it sounds like that 1962 experiment in short-term capital gains tax wasn't really a great success, and I suppose all of us would say, well, the proof of that statement is 1965 we get the full-blown capital gains tax.
Yes, you do indeed. I think 97 pages of it or something, and so that was fairly catastrophic for people who had been practicing tax for many years, and in the same act, you replaced income tax and profits tax for companies by a corporation tax. And instead of being on a preceding year basis, which income tax was assessed on, it was on a current year basis. So again, you had a major change, an absolutely fundamental change.
Yes, I mean that really was. I mean that was, in one sense, the biggest act ever. Whatever we think about the size of volumes today, I mean, is that how you would see it? The most important act of your career?
Oh yes, undoubtedly. I mean, it revolutionised the tax system, and it did cause accountants to be leaping off the top of buildings, literally, which was rather tragic.
Well, indeed. Although thankfully, plenty of people like yourselves got down to it and got to grips with it. And I mean, presumably, the fact that there was a capital gains tax now from April '65, suddenly it changed what people did, or did it just emphasise the need for the sort of thing you were talking about a moment ago?
I think because it was rebased for existing assets, the impact came along fairly gradually. But of course, the trouble with capital gains tax is that by definition it applies to assets that are intended to be held for a long time. And what you're really taxing is indexation, and that is sort of fairly horrific when you've got to pay tax on it. And these aren't real gains; they're just inflationary gains.
Yes, and I mean this capital gains tax coming in at 30% compared with the income tax rates that you were alluding to with surtax, still a huge differential. But when you factor in inflation and the way inflation was taking off, well, particularly in the 70s, then you're really eating into capital, aren't you?
You are indeed, and I mean, even if I look at my starting salary in 1960 of £4.50 a week, is the annual salary that I had then is about sort of 20 minutes of my chargeable rate these days. That sort of puts it into context.
Well, it does, in terms of showing how much of a bargain your charge-out rate today is.
Absolutely.
Absolutely. But what then was the impact on clients, on business then, of this capital gains tax getting going, bearing in mind inflation? Did that really start to change behaviours and planning ideas?
Yes, but the really high levels of inflation didn't come in until the 1970s. So it was sort of a gradual effect. And because of the rebasing, you only started to get people concerned about capital gains tax when it had been in process for some time. And of course, ultimately, it led to rebasing in 1982. Yes. So that that started again, and you had an indexation allowance, which meant that you were taxing real gains, and that was, accepted as being fair.
That was more fair, because yes. You mentioned there introduction of indexation, rebasing 1982, because really capital gains tax has been, if not the most amended tax, certainly one of the most amended taxes over its life, hasn't it?
Yes, well, I did actually check, and I only found 1 year in which there wasn't a change in the capital gains tax in one form or another, up until 1992, when the current consolidation came in. And that was in 1979, when the first consolidation of capital gains tax came along. And instead of changes to the fundamental act, we had the development land tax coming along, and we weren't exactly free of changes.
No, I mean that's quite a testament, isn't it? It changes every year bar one. Now, do you put that down to consultation, the beginning of consultation, in the sense of practitioners like you making the case for change, or was it just constant tinkering by the authorities, or change of political ideas?
Well, it became a bit of a political football, of course, and so you had, betterment levy introduced by one party and then abolished on a change of government, and in due course development land tax came along again by the Labour government, and that lasted a bit longer, but in due course that was abolished as well, and so there were continual political changes, and then tax has always been used to encourage what the government of the day seems to think is popular and will improve the economy as a whole. So there's been quite a bit of tinkering to encourage certain actions or to discourage certain actions, and that again has changed as the political climate changes and as the economic climate changes. As to what was a good thing to do one year is not considered to be worthwhile to support in the next, and so on.
So you see it more as tinkering and fiddling around with it rather than sort of responding to consultation? Or
I would like to think it was responding to consultation, but I suspect that it's not.
And sort of moving forward then to closer to today and looking back, this is a tax that's been amended mightily and has clearly kept you going and kept you busy, and kept me busy as a practitioner as well. Do you think it is a tax that's really worked, or has it just kept practitioners busy for not much effect?
Well, I'm not sure how much it's actually raised in cash terms, but I doubt whether it is substantial in the total government revenues.
So has it just served to keep practitioners busy?
That's a very cynical view, John, but I'm sure it hasn't, from a governmental point of view, been the intention to keep the tax profession busy. It's politically motivated rather than reacting to practitioners. Although, give them the due, they do listen to suggestions and for improving the system rather more than they did. And of course the Office of Tax Simplification has been instrumental in making some very sensible solutions, one or two of which have actually been put into practice.
Thank you, but still some way to go on that. Of course, some actually argue that capital gains tax is just basically income tax anti-avoidance. Do you subscribe to that view?
Going back to the pre-capital gains tax days, that's precisely what it was. And so even now, to an extent, where you've got a capital gains tax rate that was, when they did away with the indexation and abatement and brought in a flat rate of 18%. That seemed to be a real simplification. And of course, no sooner had they done so than they swiped it back up again to 28%. So I think most people would prefer 30% with indexation rather than 28% without.
Well, yes, even with indexation, inflation, what it is. So, as you've seen the tax develop and change over all these years, what do you see as the most significant change to it? It sounds like, from what you're saying, it would be the indexation coming and then going. Or any others you'd point to?
Well, I think entrepreneurs' relief is a game changer for many businesses, where a 10% rate of tax is acceptable to most businesses in most circumstances, and so I think that, allied to a proper indexation applying to investment assets, would be fair for everybody, and that's a bit of a pipe dream in taxation matters.
But you never know, we might yet get there. And taper relief, were you a fan of taper relief when that was around?
Not really. I didn't think it really made any sense. Indexation is actually based on something sensible. Taper relief, it's just a way of getting to a lower rate for assets held for longer. But businesses develop at different rates, and it seems to me that the entrepreneur's relief is a considerable improvement from taper relief.
That's a reasonable result then.
Yes.
So if I were to conclude by saying, OK, Nigel, you're Chancellor for the day, you've got a magic wand to make one change to capital gains tax, what do you think it would be?
The one thing I would like is a proper indexation that goes right the way through, and for investment assets, and then I'm happy with the entrepreneurs relief and allied reliefs for businesses, and I think that sort of dichotomy is a reasonable distinction and would be fair to everybody.
It sounds like not unreasonable set of requests, and it would still keep you going, Nigel, for a few more years. So, Nigel Eastaway, thank you very much for sharing your thoughts on capital gains tax. I'm sure we could talk about many other topics. We may well do so in some future programmes. For the moment, Nigel Eastaway, OBE, thank you very much.
Thank you.